RTX is one of the largest defense companies by sales, and CEO and Chair Greg Hayes joins me now exclusively ahead of the 10th annual Reagan National Defense Forum, which kicks off here in Southern California tomorrow. Greg, it's great to have you on the show. Welcome.
Thanks, Morgan. And great job with that interview. The Swamp Thing story I thought was fascinating with CQ. So great for great reporting there.
Oh, I appreciate that. So I do want to start with that comment we just shared from the chairman. Get your thoughts on it, especially as the U.S. does continue to operate under a continuing resolution right now.
Look, I think General Brown has it exactly right. As we think about the defense industrial base, we have to really start thinking about it very, very differently. And it starts in Congress, where each year we get an appropriation. We go out, we sign a contract for a year. And we do that year after year, and some years we get CRs, which slows the process down. If we really want to make sure that we've got the deterrence necessary to fight both conventional wars like we see in Ukraine and future wars like in the Asia-Pacific region, we have to fund things differently. And I think, again, this is where the DOD has done, I think, a good job of thinking, how do we change our behavior here? It's going to have to start with Congress, but if we can think about keeping production lines open, even when the demand isn't there, that's what's going to allow us to flex when we do have a need that becomes apparent that we didn't think we were going to have.
And of course, we do see that need now. You and I have talked about it before. The surge in demand for example, RTX products, whether it's missiles or missile defense systems or munitions or some of the other weapon systems and deterrence products that you make. Walk me through demand, as we have seen sales move higher. We've seen the backlog move higher as well, and how quickly you can meet that increased demand.
Yeah, so Morgan, if you think about it, our Raytheon business has a backlog of about $50 billion. There's another $25 billion of defense backlog on the Collins and the Pratt Whitney side. So it's a huge backlog, $75 billion. And that is going to continue to grow. As we think about the next couple of years, we see huge demand, especially, as you said, for Patriot air defense systems. You know, the U.S. has about 60 of them deployed globally. We know with our 18 partner countries that there is going to be more demand, and it's going to take an all-out effort. You know, right now, if you want a new Patriot system, it takes 2 years. And we have to think about, how are we going to increase production on Patriot? But it goes beyond Patriot. It goes to Standard Missile 6. It goes to a whole range of products, Stingers and Javelins. All of these things the demand, again, far exceeds our capacity in the short run. And so we're going to have to address that through capital additions, but also through, I would say, some novel contracting with the government. But we're working on it. And again, I shout out to Bill LaPlante, who's head of acquisition and sustainment at DOD. Bill gets it, and he has been working with the defense industrial base over these last couple of years, and I think making some real progress.
Even as we have this conversation, I mean, you're targeting strong expansion in your margins within the defense business over the next couple of years, very robust margins from an industry-wide standpoint. As we have this conversation, as you continue to navigate some of these supply chain issues and issues around building up that defense industrial base, how do you get there?
You know, Morgan, it's a great question, and I think as we go out and talk to investors, it's their biggest question, because I would tell you margins have been disappointing on the defense side for the last couple of years as we have fought through both inflation and some significant supply chain challenges. The other piece of this, of course, is as we're transitioning to some of the newer products, those are going out with lower margins. As we go through 24 and into 25, I really believe most of the supply chain issues will be behind us. You know, rocket motors continue to be a problem. But electronics and all those things that we've talked about for the last 3 years, really almost back to normal. Inflation also looks like it's coming down from last year's elevated levels. 4% is a lot better than 8 or 9%, but still, it's a problem with margins, especially when you have multi-year fixed price contracts. So the folks on the Raytheon side are laser focused on margin expansion, and it's going to take cost reduction. We're going to have to figure out with our suppliers how to take cost out of the product. We're going to have to take structural cost out. And again, that is just going to take us some time. 25 is the goal, to see margins back up in the kind of 11 to 13%, and it's going to be a tough road.
Okay. I would be remiss, speaking of investors, because they have been focused on this, given the fact that you've taken charges earlier this year. It has weighed on the stock. But on the Pratt & Whitney side, the geared turbofan engine recall, how is that progressing right now? And I guess over the near and longer term, what does that mean in terms of being able to hold market share against your peers?
So, Morgan, I would tell you there's no news to report there. I would tell you that we are continuing to make progress on the engine inspection regime. We're making progress on ramping up parts production. So no news there. But again, it is causing a lot of consternation with our customers. And our focus right now is helping our customers through what is going to be a very, very difficult 6-month process.